So the Bitcoin Lightning Network, it's an interesting thing, and I think it's a needed thing. If you want widespread adoption of Bitcoin and you want it to act as a true replacement for fiat, it obviously has its limitations in speed, and part of that's really because it's an anonymous sort of software that really hasn't had the support it needed, and it was conceivably never really thought to have attained the level of adoption that it has. So it doesn't work fast enough. It's actually slower than cash, despite what a lot of people think. But there's a few parts of it, right? And you really there's a lot of understanding that goes into how it works, but I want to kind of take it in parts because I think there's some interesting implications in terms of how this would fit into our existing financial system and how the Lightning Network would conceivably bring Bitcoin into more of the mainstream, but perhaps involve more of the mainstream, which traditional Bitcoiners may not really want. But if you think about the basic concept of at least the first of sort of three tenets of the Lightning Network is you have these off-chain sort of transactions, right? Where if I want to send Bitcoin to you, I open up a channel and my output can only match your input. And that's how the redundancy works, even though it's off-chain. And at a later date when that transaction, that channel's closed, that transaction is then reduced back to the blockchain and put on chain. Well, the concept is that channel that I open up with you would serve to create this network, much like sort of sinews in a brain in a sense, right? So if I wanted to send Bitcoin to you, I open up a channel with you, but you happen to have a channel with John. Okay, fine. Well, I want to send Bitcoin to John, right? So now, under the way the Lightning Network is currently structured, is I would send the Bitcoin through you, or be able to send the Bitcoin through you to John, who you have a channel with because of that connection. And so you can see where if you multiply that over many, many people, you have this multiplicity of smaller transactions, which begs the question, how do you arrive at the entirety? If I want to send you one Bitcoin and it's got to go through 10 channels, how do you have that arrive at once? And that's sort of a technical question. But really the bigger issue, which I think that's outside of the technical aspect of it, more of the feasibility aspect, is if I want to send 5 Bitcoin to John, it has to go through you. And if you don't have 5 Bitcoin, okay, I effectively have to lend that to you, right? And that's the only way that you'll be able to get my Bitcoin over to this third party. Well, what does that effectively sound like? That's a bank, right? That's a traditional bank. If I put in $1,000, right, under current banking regulations, they take 900 of it and they lend it to you, whether it's in the form of a business loan, a mortgage, credit card, you name it. But that's how it works, right? That's how our financial systems, in our capital markets is really based on. At the same time, if you want to take the concept that Bitcoin is a security and not a currency, what does it sound like? Well, it sounds like a market maker in an equity market, right? A market maker acts to hold an inventory of a security and facilitates trades between two people, especially when there isn't a full lot to be made. Well, again, if I'm going to transfer through you because this is how these off-blockchain transactions need to work, it's just a series of lending transactions, and ultimately when you get enough people, it's going to fail, right? Unless you have an intermediary that's either holding a block of Bitcoin and can facilitate these exchanges, right, with these sort of instantaneous lending and borrowing exchanges, or like a market maker where I'm just putting two people together and getting a spread. So, I believe, at least as the first of really 3 tenets of the Lightning Network, the only way that it really would work on a grand scale and actually, be able to obtain the scalability that it needs and that in theory it should make in the speed that the whole concept is based upon, is that you really almost need the involvement of major financial institutions to do it, right? That have the capability, have the the viability, have the capitalization to effectively act as a facilitator of these off-chain transactions. So, while the Lightning Network is something that's I think is necessary and I think everybody wants, it's one of those be careful what you wish for because you just might get it, because in fact if you get it, you're probably welcoming in major financial institutions, which some hardcore, like, early adopters don't want. But, at the end of the day, it's part of the legitimacy argument. So something to consider, and it gets brought up a lot on the chat boards and all that. So I wanted to kind of hit on that point. But there's two other points which I'll sort of address later. But in the meantime, want to talk about this first element of channels and look at really try to understand the Bitcoin Lightning concept of channels, and make some sense on how, when I've got to go through other people to reach another person, how it becomes this sort of lend-lease opportunity for Bitcoin, and how on a grand scale it just simply can't really happen. So again, check me out at tracyfirm.com. Take care.